Hola. Hello.
Hello, Steve. Hello,
Hello,
Scott.
Jamie. Hello,
Happy
everybody.
Monday. Happy Monday.
Yes.
I hope everybody had a great weekend. I certainly took some time off and relaxed, cleared the old
Good.
hard drive, and now here we are again. And it is the first day of October. September's in the history books. So welcome everyone to another edition of the Office Hours with myself and Mr. Steve Gomez. Before we get started here, just want to do this to make the lawyers sleep a little easier at night. Just so everyone knows, we are here for educational purposes only. Please do not misconstrue what we present in these webinars as a solicitation to buy or sell anything, especially securities and whatnot. If you need investment advice, please seek out a registered investment advisor or some other licensed individual like a Series 7 broker that can help you out with that type of stuff. I think that's good enough. So for the new people, might be kicking the tires right now, and for you regulars, thank you very much for bearing with me while I talk about not only, we're going to be getting into the award-winning software here pretty shortly, but it's always important to take a moment to tell the new people about the vibrant community that we've created here in the Trade Ideas world. Now, if you haven't been taking advantage of the free trading room that's accessible to everybody, certainly need to start doing that. It's hosted by Barry Anderson. He gets the room open about 30 minutes before every open, showcases his trades and talks about how he uses the technology. And, depending on the day, it could be 400, 500, 600 people or more in there. It's always going up and down a little bit. But, I mean, if you've shopped around trading rooms, you know that they're not free most of the time, and then you're also having to grapple with the quality of things that are in there. Well, this one is high quality and it's free. So if you haven't been taking advantage of that resource, by all means do so. Of course, today you get myself and Steve, and then we change it up tomorrow with Steve taking the helm on the Trade of the Week webinar. Andy Linloff is going to ride shotgun with him. Get on over to Hump Day Wednesday. We've got Dan, the CEO and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams, steering the ship that day. So always a good little breaks, change of pace, highly entertaining. I'd recommend it. Andy's going to round out the 5 o'clock Eastern webinars with the Trading Studio, and I ride shotgun with him. Friday rolls around, we change it up even more. Friday support webinar starting at 11 a.m. Eastern and going till 2 p.m. Eastern. We've been getting record crowds in there, so obviously you guys are liking it. So it's basically anything TI related. On a normal day, if nobody's traveling, you got myself, Sean, and Steve and Andy in there. So several minds looking at the issues and knocking those out in real time. In addition to those 5 webinars, we've implemented TI University. Wow, seems like just yesterday, but I'm sure it was months and months ago. Everything from beginning 101 all the way up to advanced 401 running Monday through Thursday. These guys start at 9 o'clock Pacific time, right? Noon on the East Coast. And I believe it's 11 here where I am. So we cover the whole gambit. 101, 201, 301, 401, rounding out on Thursdays. Of course, we do recommend that you take these in order so that you'll be prepared for the next session. So all in all, 9 webinars a week for your learning pleasure. Of course, we always like to tout the AI, not only because it's awesome and is doing just incredible things in the marketplace, but also to show you guys how it affects our user base. Of course, this is probably a little dated since it's only looking at the first AI release of Holly and what's happened to our user base since. And of course, we've got 2 more now, which we'll be talking about very soon here. All right, so here we are to today's activities. And before I do my bit, it's that time again, Steve, to look at the big boys and talk about where we've been and where we might be going, if you're ready.
All right. Let me get the cat videos off my screen. Go ahead. Send it
Yeah,
over.
unicorns as
I
well.
noticed you got gap up there on your slide deck for what we had today. And yes, we did have a bit of a gap up. unless you're Facebook or Twitter, which I'll come back to in a moment. I've got something to say about Google. But let's get back to the ubiquitous benchmark, the S&P 500, as indicated by the SPY ETF. It's our best tracking device. Just using the simple ETF, and on the daily chart, where I last left you, 1, 2, 3, 4, 5, was basically probably back here on a quick pullback, and I said it was a decent pullback, you know, for the most part to its pivot line, the area from which it broke out, it pulled back to, and we've been wallowing around that line a little bit since we last spoke, even closed below that line 3 days last week, Wednesday, Thursday, Friday, and Tuesday it appears. So a little sloppy action the remainder of the week, but today with the gap up and the relative holding of the gap, we'll say. Obviously, some elbows were thrown here to the upside with that wick, and some elbows were thrown to the downside at lows today. But for the most part, just a nice spinning top doji there, and it is a net change close higher. So regardless of how it did it, the markets did close higher, and coming off of hopefully a higher low base right here. For the most part, except for Wednesday, it was trying to hold this red at 20-day simple moving average. But that is not quite as important to me as that orange line I just drew again. We have popped back above the trading range, and the bulls need to keep this price closing action intact above this orange line. If we drift back down into no man's land again here, like we did last week, that might start to get a little sluggish in terms of price prediction and a clean trend that we're in. Maybe that could be the beginnings of some messy range-bound trading, which is not as desirable as trend trading, to say the least. But that's what we have in the SPYs. Nothing really bad. Closing okay. NASDAQ looks like we got real close to maybe even kissing prior all-time highs in the NASDAQ. That respective line, let's see, is roughly about there. It was resistance back here, then we broke through on a gap above, traded back down, and we've slowly been bouncing off of this rising 50-day blue 50-day moving average. So that's been really the tell in the NASDAQ, more so than these pivot lines. But we're back above all moving averages, price above the 10, the 10's above the 20, the 20 is above the 50. No bearish case to be made here in the NASDAQ. Let's go over and look at the Dow, Father's Oldsmobile. Looks like it's trying to do a perfect trend higher low bounce. A nice push higher, a give back of about 60–70% of that move, base for 3 days, and a nice gap higher and a green candle, even holding much more of today's gap up in the action. In the action over there in the Dow. Forgive me if I called it the NASDAQ, in the Dow today. So the Dow is looking rather perky, to say the least. And again, those highs, that line that we drew in here represents the prior all-time highs a few months ago. And so zooming back in, using that reference point, we reclaimed that pivot point once again today and closed above it. Price above the 10 above the 20, and the 20 above the 50, all nicely fanned out. The Dow is looking very nice, very decluttered, very simple in its action. And that takes us to the one red flag we have to raise. What the hell is going on with the Russell 2000 over here, guys? I mean, if you can't see this, something is going on in small cap land. The market is throwing in the towel on any interest they might have for small cap stocks, because the IWM represents the Russell 2000, and this looks nothing like we have been looking at in the last 3 ETFs, NASDAQ, Spiders, and Diamonds and Qs. So that's got my head scratching a little bit. I mean, we could not get back above our respective pivot line on these 2 attempts, and we have been thrown way back down into the range. And we are below the 50, below the 20, and below the 10. And those respective moving averages are also curling and crossing over each other. Nothing really pretty to talk about here in the IWM. I mean, we could look back and maybe try and draw a trend line off these 2 lows, and just eyeballing it, we kind of broke that trend line here today. So a little bit of interest, curious interest of what's happening in the weakness, the relative weakness over in the small caps. They're just not performing as well as the big caps. And this might translate for some of you who really want to focus on stocks under $8 or $10 or even $5. Probably not the best of days today for those stocks either. I mean, the backdrop and the parent ETF here of the IWM says that the Small caps are not in favor right now. That is it for the 4 ETFs. Again, no bear case to be made necessarily for the spiders. The NASDAQ looks great, and the Dow looks great. So yeah, that is what it is. The only concern is what's going on with small caps. I said I would come back to, I was taunting Facebook and Twitter for not gapping up with the rest of the market today. You know, I had my cousin try and give me the bull case of why, you know, these stocks should probably be bought down here, more so with Facebook and Google, but I had to remind him I don't really concern myself with the news or what people say or what analysts say or what you might think is coming down the pike for new services or programs or revenue generating streams. The profit, the price action, the footprints in the sand tell the whole story. Twitter is doomed, guys. I just don't see, and again, somebody can come at me with a case as to why they might be doing something different and better in the future, but until now, this stock looks like it's just flirting with disaster here, waiting to break down. It'll probably be a big news event that gaps it down through that level. Facebook, once again, also not performing anything like our NASDAQ. Facebook definitely broke with tradition back here on their bad earnings, and they've been putting in a higher low, a lower high, followed by a lower high, followed by a lower high. This little wick on the last Thursday was kind of interesting, which brings me to, you know, we did write that ebook called What to Do When the Market Stops Working with Buy the Freaking Dip Stops Working. I'm looking at Google, and it's had a bit more of a bounce, you know, than the other guys, but it, you know, it's not back quite close to all-time highs up here. But what I'm seeing is definitely weakness in those particular types of stocks. And what I saw today in Google was, my first reaction was, this is a really good short entry, taking a page from the chapter of the ebook that we wrote. So let's look for a second. Down here, we're watching these support levels. Like I said in Twitter, it's just a matter of time probably before Twitter breaks through its you know, support level over there. But look at over here on this green bar. If somebody was waiting for Google to break that orange line and then go short, that's called shorting in the hole. All right, shorting in the hole doesn't necessarily work really well, especially when the rest of the market's still trending up. And as you can see, the shorting in the hole was good for about maybe 15 or 20 minutes during the day, and then immediately bounced those short sellers out and pushed them back up. Tesla's been doing this a lot lately. But if you're eager to want to short and you have the feeling, kind of like I do, that Google's in for some rough waters, and Facebook and Twitter alike, this kind of bounce today was just perfect on 2 levels. One, we washed out the short sellers in the hole. They probably had covered in the last couple of days, and then we had a nice spike to maybe a new 15 or 20-day high right into that flattening 50-day moving average. And then looking at the candle, it gave us a nice reversal candle. So there's a check mark on that as well. And then when we look at the price range in general, one can make a great case that, you know, the highs today where resistance was found made perfect sense. It was resistance back here. It was a gap above that. It was a filling of the gap there. And then it held some congestion back here again. So this line has significance beyond just the recent bounce and the topping tail and the 50-day moving average. If you look left, it also has significance as a pretty major pivot level. I think these are the kinds of entries when, big capital W, when the market does turn, guys, this is the kind of setup you're going to want to be using for shorting and swing trading. I'm talking from a swing trading perspective here. Let the early, the second mouse gets the cheese, as Jamie likes to remind people that I say. This first mouse did not get the cheese. That mouse got whacked. But the second mouse got the cheese with a much better entry and a much safer position to move all the way down to these levels. And then if you break through those levels, well, your entry point is basically golden. So just wanted to kind of give somebody, people who are curious that have read that book, a visual example of one of the chapters I wrote about how to sell the rip. We know how to buy the dip, but selling the rip can become a whole new method in itself. So sorry if I went too long there, Jamie. I just kind of wanted to spit that out. And that's all I got. And are you on soft mute?
Oops, I didn't even know I had pushed my mute button. But anyway, hey, no, those are some tasty nuggets, Steve. Thanks for sharing that. Sure. Now, it's funny that you said with Twitter, you never know, there might be a news event that gaps it down. When, of course, what do we have? We had the opposite of that today in Tesla, right? Yeah. You want to throw Tesla up there real quick, just so we can take a gander?
Mm-hmm.
Yeah, and
Yeah,
Oh, $20 million fine by the SEC, and then boom, everything's fine.
it's really tough to handicap news when you're a swing trader, so it's just a bad example of what can happen when you're on the wrong side quickly.
Yeah, yeah, exactly. And I forget how many shares does Elon hold of Tesla?
I forgot, but I did hear this was an $8 billion market cap bounce today.
So, okay, here's your 20 million. I make 200 million or whatever, you know, the figure is. So that's just funny because we all know it was just going to be a slap on the wrist and then, continue onward. Anyway, interesting on Tesla. Okay, so let me grab the baton here. And we shall proceed with today's agenda, which very interesting observations throughout the day. From a 1,000-foot view, were just simply things that were throwing up red flags right off the bat today, and then we were seeing kind of things that we don't normally see from the AIs, which even leads you to go, what kind of day is this? And if we're having to try really hard to figure out what kind of day it is, it's probably one of those days where you just want to kind of focus on quality, right? So expectations are so important, not only in trading, but hey, we could extrapolate that to all aspects of life. Compare count. What were we looking at this morning after the first 15 minutes on the big boys? Anything capitalized over $4 billion, and there you have it. 51% green, 49%. So bullish by 1%, right? After a nice juicy gap. So, oops, why did I do that? I meant to type in SPY, not gap.
Ain't that
Anyway,
total Freudian
you
slip?
see, you see what we did here. We all know that typically the bigger the gap, the handicap level kind of gets increased in the marketplace because all the steam, all the juice was in the gap, and then we tried to push higher. But hey, when I see when I see these types of readings, especially going into a decent gap day, it makes me go, okay. If I was a surfer, I'd be like, do I even want to paddle out? Okay, and if I do, what am I going to do out there except waste energy? And Steve used the term floundering around or wallowing around earlier. Great term because that's kind of how the day felt starting off here. So number one, when I see this, I'm like, okay, well, there will be some upside potential. There always is, but guess what? You really better focus on quality. It's going to be very important today. Yeah, there are some days where you can, not do quality and it still works, but today was not one of those days. And if you did get some quality signals, quality chart patterns, well, then again, you might have gotten a little move. But was there a lot of continuation? The answer is yes, there's always continuation in some things, but man, the number of those types of things today were relatively low, so to speak. Now, trading psychology, a little bit of this infused, right? We all have probably heard some form of this quote before. Patience is also a form of action. Look, August rode in. There he is. There's August over there checking us out. He's also the guy that, did the thinker, the statue of the guy with his head on his hand, right? We could say I trade, therefore I am. But man, this really came into play today. And it was interesting because as I was piecing all these things together and we were progressing further into the trading day, I'm talking to my boys here at Trade Ideas on the Slack and hearing a lot of the same thing. I didn't do it. I haven't done anything today. It's just nothing looks good enough. Other well-respected people on Twitter saying, hey, difficult tape today, difficult tape. But, the writing was on the wall. The question is, do you know how to read what was on the wall? And hopefully, we can shed a little bit of light on this with, number one, these compare count readings. And by the way, I always find it interesting, all of these quotes, you'll see all different types of people putting this quote out in some form or fashion. But I always find it interesting to go back and try to find out, okay, who originally said it, right? Like another favorite quote of mine from Leonardo da Vinci, simplicity is the ultimate sophistication. Originally, I thought one of Einstein's quotes was where that came from, but guess what? If you track it back far enough, it was good old Leonardo. Now, did he steal it from somebody? Probably. haven't taken the time to go back and do that research. But this little juicy quote right here, I do believe that this guy is the originator. As to the length of time I went back, I'm sure maybe old August borrowed it from somebody. In any case, I found it entertaining that there was another one out there, and I just did a little editing, right? In a critical sense, doing nothing can mean doing something. Inaction can be action, and embracing this paradox can save your account, right? All right, so having said that, let's get back on track here. We will revisit, or we will visit, not revisit, the very thin, high-quality alerts that I was privy to later on in the webinar. But first, let's talk about Holly, because Holly is another, you could say, canary in the coal mine, robot in the coal mine, whatever you want to call it, because, you know, circling back to what I said earlier, things happening that don't normally happen. So we all know the AIs typically don't just jump right in on the open. Some strategies like sunrise movers and whatnot, they'll get started about 5 minutes into the session if those strategies fire. But I've got Neo pulled up here. Why? Well, Neo's been my favorite. And since we can only view one AI at a time right now, but guess what? That's going to change pretty soon here. We're going to have the version come out that will allow you to view all Holly segments or only the ones that you want. In any case, you won't quote unquote miss trades because we didn't see one get fired off today. I kind of fell victim to that same trap today because one of the 2.0 spit out one that we'll talk about here shortly. Did I see it in time? No, because I was watching Neo. In any case, I've sorted by entry time here. So silence for the first 30 minutes and then, you know, I thought my software might have been malfunctioning at first because we had nothing, and then in the span of a little over a minute, we had about 5 signals here come in. They were all from the same strategy. I'm thinking to myself, man, it's usually not the way the AI starts out. It's one here, one there, one here, but boom, 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 all these on supports, and of course, they all start ratcheting the P&L. I was cruising through some, and I'm like, yeah, I don't know. This is unusual. So let's just see what happens. And of course, you know, these things ended up not working, right? So that was another red flare that went up today. One that was telling me, okay, keep your powder dry, only the quality, right? Slippery slope. And so there you have it. Now, as far as the performance, check out the risk on P&L graph today for Holly Neo. Underwater, which is not uncommon in the pile-in phase. Usually we don't get down quite as much, but it's not uncommon to have a little bit of red before the green starts to kick in. But boy, you know, we ratcheted it up to one more, you know, level here, got about half of what we were down back, and then started, you know, tiptoeing into the green area. But it sure wasn't smooth. Green, red, back up to green, back down to red, and then whoosh. But look at these pullbacks. I mean, all the way up to almost the point, almost back to flat. And these gyrations here, and then after a while, we're like, up. Neo's pulling a sea biscuit one more time to win the day. But guess what? No, all the way back again. So, you know, a lot of opportunity on the table, but what was that? How does that translate? Not a lot of follow through. The old grab the cookie while it's there, because if you don't, crumbs, right? So all in all, if, you know, and I was joking about this earlier, hey, if you made a little bit today, or if, you know, hey, if you made a lot, bully for you. If you made a little, great. If you were flat, you also did very well today. And if you were down a smidge, congratulations, all right? But if you were down a lot because you just kept going back in there, grudge trading, as we like to call it, they got me out, I'm going back in, you know, then that's when it's time to pull the reins back and, you know, go over the basics and just, you know, not overtrade when the market is flat, right? Or, you know, non-conducive. So let's sort by risk on here, because we can see lots of red on the blotter today. Very uncharacteristic of the AI, and I do believe, prepared a little slide here earlier. Let's just take a peek at the Neo performance chart here. Let me just make this a little bit bigger. All right, so this is Neo since inception, right? Risk off performance. Not doing too bad, right? Overall. Taking a little flat period here, but hey, we look here, there are losing days, but there's plenty of big, fat, juicy green days in there, more than there are red. So this is the first day of this week. 1, 2, 3, 4, 5. You know, you can see in the last 5 days there's always something good happening, typically. Not all the time, but just wanted to give everybody a peek at the long-term chart. A little flat area right now. Not too crazy, you know, since we're right up here pecking at highs on the market and looking as if we're going to go higher. So we typically like to showcase how we can interact with Holly on a risk-on level. Now, just aren't any opportunities left on the blotter by the close today, with the exception of NTGN, which was a pullback trade signaled by quarterback. And I do have to tell you, talk about a diamond in the rough today. I mean, you know, stock is a little thin, but hey, in this entry candle here, and we're looking at 5-minute candles, it ticked off 12,000, almost 13,000 shares. So, you know, probably plenty of liquidity at this time. You know, doesn't really matter what platform you're on. Depth pool is the same, but should have been good for some fills there. And, you know, I really like this chart because we've seen this time and time again where Holly triggers it. It comes up here, it pops a high, technically gets a breakout, but she calls it right here, right under, you know, a daily range break. And we've got that statistical weight on our side. And it doesn't matter if the, you know, if in this case, the AI brought it to you, but even if you stumbled onto this one through one of your manual tickers, I mean, this is a quality pattern in my opinion. You know, number one, Holly brought it to us. Quarterback was rocking almost 70% probability coming into the session. So that's good to begin with. We notice, hey, it's trying to break through that range right there. Relative volume was strong all day. And even if we had been brought to this stock through another window, you know, if you've heard me time and again, you know, I like the range breaks where, not including the entry bar, which was this one, the prior 15 minutes, the risk is tolerable, 5, 10, 15. So basically, you know, as far as a range break goes, the entry line, right? Good risk area if you really want to tighten it up a bit. In any case, we see what happened here, right? A nice trade by Holly, evening the scoreboard out a little bit, or trying to, and pulls 95 cents, getting out, well, can't say that's the timeliest exit right after the big red candle is done, but, you know, that's the way the ball bounces sometimes. Buck, almost nothing to sneeze at, especially in a small cap stock, because risk on is rocking 19.21% at the close. Now, would it have been an easy call to go risk on this one? I've seen better, but keeping in sync with the day and how difficult of a day it was to trade, you know, not surprising. Usually we don't see such, you know, vacillation here, but obviously this one was in play. Typically it doesn't do a whole lot of volume, and look at our float here. You know, this could qualify as a low floater. On the higher end of the low float side, I mean, I think 20 million is kind of where you draw the line for low floats. So not the lowest float, but pretty thinly traded nonetheless. That's why you see these big vacillations, severe pullbacks, and why it got propelled higher by the end of the day, and getting right up to this area right here where it ran into some resistance. So, you know, there's always some stuff that we can pull out that's not necessarily listed here, you know, and identifying patterns where Holly is calling pullbacks on patterns that may continue to, you know, I should rephrase that and say some of our favorite patterns coinciding with Holly, even better. So not a whole lot of risk on to talk about with Holly Neo today, and really not even much of any trade arounds here. This could technically be called one, but I think we've got some better examples from some of the short plays in the other segment here. By the way, let's see how, you know, hey, it's no surprise that power hour short went 2 for 2 today, because once again, that's just the way the market started leaning at the close, and the longs weren't working too well. So, this the deductive reasoning there. Hey, well, maybe I should pay attention to power hour short today. And it did spit out a couple of little green nuggets here. And let me just, well, we can sort by time because those were the last ones. So a couple here. What we should pay attention to is the max profit during risk off time here. So we had max profitability at 41 cents. Not a bad entry here. We've seen this time and time again. Hugs the entry line for a little bit, finally gets the punch down, and not a bad exit there. Not really a whole lot, there is no risk on spread there, but as far as just doling out some green nuggets to end the day there on the short side, that's what we like to see from power hour short. Now let's see if we can dig out a trade around here. It might have been in the Holly 1.0 segment, so let me pop back over here. Okay, well, we'll talk about this reduced risk first, because reduced risk exit is what I meant to say, but definitely some nice fat spread in there between negative 16 cents on this Sunrise Mover DCP and $1.05. I mean, not bad at all. Once again, let's go to 15 minutes for a minute, see if we can make that chart look a little more conducive. Yeah, all right. Once again, not the highest volume stock, but plenty of liquidity here, looking at average daily volume of almost 600,000 over the past 3 months. Little buy signal here through kind of at the bottom part of the wick. A little bitty pullback, just hugging the entry line here, and then boom, off to the races. Once again, this is a great one where you could have tacked on a little size here once these bars continued. We're still in the trade. If we go risk on, this is Holly in risk off mode. So she gets in it, and this 15-minute bar, by the time this one rolls around, it's going sideways. The reduced risk functionality is her audible that she can call if the trade's not going in the direction, in this case up, that it's supposed to. The longer time progresses, the more likely she is to get out on a reduced risk or a profit save, so that she doesn't let profits erode into losses. That's really the reason we give her reasons or give her audible options. But bringing in our human chart reading skills, okay, it's going sideways, no big deal. Made one little push, still had quite a bit of leeway here between the stop and where this guy wicked out. Then boom, boom, this makes us feel more confident, might work. This is going risk on. We see Holly taking her loss. We see it going sideways here. Of course, it'd be a little bit more discernible in the 5-minute period as we chop along this area here. But once it takes root, what are we seeing here? We're seeing pretty much a pattern that we see all the time. Use the wick to play by the rules. We're in it early because of Holly with the statistical probability. What do we have here? A range break. Volume not off the charts, but was pretty quote unquote normal most of the day. And we get a nice continuation. So whether you stuck with your original lot on risk on, maybe you did half and half. Maybe you said, well, it's a slippery slope today. Maybe I'll eat half of my loser, half of my position on a loser with 16 cents, keep the rest, hope to get some back. In this case, you would have been rewarded. Once you get really proficient in identifying these patterns, this is where you have some great tack-on opportunity to bolster your position, right? You're already in it from Holly, high probability. Secondary pattern emerges, boom, what a great time. This would be a great entry to begin with, all right? It's a really great place to add to a position and hopefully capture some of this because we've got that secondary pattern coming into play there. So great example of risk on there. IGC, not too shabby either. Now, of course, you had to be very patient on this one, right? Well, can't even say that. If you would have stayed in this one, you would have been stopped out. We didn't get that big push till the very end there. So Holly reducing her risk, taking a 1 cent loser there. Probably not a bad call. Had you stayed in this one, the stop out would have occurred. But once you know about something, and to be quite frank with you, would there have been time to get a piece of that? Maybe, maybe not. It just depends on how volatile the stock was at that time and if you were even paying attention to that stock anymore. Now this little guy right here, nope, I'm looking for a stop out. Usually I like to consider something that was stopped out, then goes back up and hits that entry line again as a trade around, but just don't really see anything that fits the bill today. So I'm not going to really try to force it on a trade around. Let me revisit 2.0 one more time just to see here. Well, and once again, don't really see anything that fits the bill. This guy stopped out, but kind of just got right back to the entry line. But it is highly interesting to see, boom, how these little guys work here, these little pivot levels. Sometimes we use a stop out as an entry signal. Today probably wouldn't have been a bad idea to embrace that strategy, or if you're not sure, which today was anything but certainty on any direction, right? Not only in the things that I've pointed out, and everything from the compare count window to the strange activity of NEO starting the day, to a myriad of other things. The longer you see these things and the more days you spend in the chair, the easier they all come into focus, right? So it's just practice makes perfect. Get acclimated to seeing these things, and repetition works. So that's about it. That's about all the Holly content. Now let's talk about, everybody's got their bread and butter windows. I've got mine, Steve's got his, Andy's got his, you all have yours. And there were a couple of good things in there today, 2 or 3 good things. So let's talk about those. Now, my favorite windows are my Turbo Up family, no resistance. Of course, I've got some stripped down versions of this that don't require no resistance, but this is my go-to window right here. Now, of course, not near as many things showing up in this ticker as normal. Certainly not a whole lot of small caps, even though you will see the occasional yellow. Not a whole lot of blues today, which are the things under 4 billion, and the yellow is even under 2 billion. But let's talk about, once again, the theme of the day was quality, being very selective. Now, before we get into the Turbo Up, I do want to talk about an observation I made with the composite rating and a window that I use, which is basically a modified version of Steve's window, where he has his sorted by the short float. Now, I still have that column in here. I'm just not using it as the sort mechanism. Now, in some of these prior days in the SPY, I noticed, man, hardly any stocks in the 90 score range, right? Now, I've removed the short requirement in the filter configuration here, just so I can get an idea, okay, how many stocks might there be that are in the 90s today? So I'm not mandating anything but a minimum of 90 and a little bit of volume here, and then just sorting by composite rating. So when I did this middle of last week, a couple times, man, it would dry up pretty quickly. But now we're getting a ton of things in the 90s, right? Some are active, some are not. We've got relative volume up here, which lets us see, were these things even active today? How many shares are in the float? I've also done a little custom colorization so that when I'm sorting by this guy, the ones with the big short floats still pop out because I've done some custom colorization there. But the bottom line is this: there's a lot of these 90s out there, a whole lot. Now, that means something. Now, I can't be certain, but if there are that many high quality patterns out there based on our composite rating, well then, maybe this is just a little lag time, while all these stocks that are the body of the snake, the head moves first, right? Then the body has to catch up to it. So that could be why we're seeing so many stocks in the 90s now. And, that momentum will get carried through, and maybe, just maybe, we'll see the head push through again. We'll find out. Just an observation that I made today. I want to share. Now, let's talk about the good things that did come through today from turbo up, no resistance. First one I saw today was NVIDIA, of course, big boy cap, and then Boeing, one of the military industrial complex, which has a substantial market cap. But remember, it was all about quality today. So let's just take a look at the NVIDIA, which was, we're going to have to go smaller time frames. I like to use 5s on the open or that opening hour and then switch to 15s later in the day. Because the 15 minutes, you'll just see the straight up action. You can see a little bit smaller here on the 5 minutes. So nice little gap on NVIDIA. Came up here, did the sideways dance. Once it topped out here, we got these little candles right here leading up to this little clean break. This is about the earliest that, on 5-minute candles, you can identify patterns like this. So we got 5, 10, 15, 20, right at the 30-minute opening range break. We do have alerts for the 30 minutes, right? But as we get past the hour, it's manual style for trading these. So needless to say, I wasn't using the orb alert today. I was just looking at my turbo up family, no resistance. So a real clean entry here, right? Pushing on through. I've marked up the risk here because when you're using this pattern, intraday range break, it's all about the quality. This is really nice quality, and this little, barely enough time to consolidate, but still visible to the eye. Now, the entry candle, anywhere in this was not a bad fill. Hopefully not the top of the candle, but anywhere in that bottom 3/4, even the top of the candle would have worked. What's our risk in this situation? Not including that entry candle, the lowest point of the past 15 minutes. So in the end, this was the risk, this was the reward. It was a very liquid, identifiable stock. Everybody knows NVIDIA. Everybody knows what they do. Added bonus, no resistance, right? Got the little gap up and push through. The great part about this simple pattern, fractal, right? Using the same pattern here to get us nice and snugly on an entry with low risk with the same pattern here confirming on the daily, right? Might be one to keep an eye on moving forward. We never know how many days in a row they're going to run. Like square, right? Up, down, up, up, down. And sometimes they go, let's see, that's not the one I was thinking of. Anyway, there's some out there with 6 and 7 consecutive days. Sometimes they go that many, sometimes they don't, but in any case, not a bad trade in the Boeing today. Or excuse me, I'm sorry guys, I mixed my symbols and company names there, right? NVIDIA is what we were just talking about. I was calling it Boeing, that's my bad. Now let's talk about Boeing, all right? One of the MIC stocks, military industrial complex. Once again, getting a nice breakout here on the all-time high. But man, talk about snuggly entry right here. I mean, really nice little micro consolidation on the 5 minutes. We get the alert here coming through, turbo up family. What's our risk like? Well, got a line there a little bit, but here's the entry candle. We go 5, 10, 15. We use that wick, risk area, reward area, right? So NVIDIA and Boeing doing their thing, getting out of their box, no resistance, might be ones to keep an eye on tomorrow. Maybe they continue, maybe they don't, but if they present nice risk on the entry, definitely ones that we should pay attention to moving forward. Sure, Mike. I will share that window, no problemo. Now, we did have one come through on the sub 2 billion category today, and that was this little guy right here. One of the only stocks to come through. Everything else was pretty stretched out and gross looking. But this little guy, this probably barely makes the cut for what I like to call quality. Of course, these aren't very big vacillations. The pattern is the same. It's just not near as pretty as the bowing that we looked at, but we can see here it sure did work, right? So what was this one? 5, 10, 15, 20, 25, 30, just a little after 30 minutes, clearly identifiable prior 15-minute downside there, and a nice little pop, nice big reward area. I forgot to put in my words of risk and reward, but I think everybody knows what I'm talking about here. Everything else was not working. By the way, Jamie's just showed us 3 things that worked. What does one look like that doesn't work? Well, prepared one of those guys for you here. Okay, Roku. I think everybody's familiar with this guy. He's been on quite the run himself, or it has been on quite the run itself lately. But when you get stopped out of one of these things, right?
Mail.
Yeah, exactly. Sorry. I hope nobody complains. In any case, perfect example of one of these that does not work, right? Look, not the highest quality. Don't like to see so much wick action here. But look, the pattern is the same. Boom. We got all happy because we might think it might be going higher too. Risk is snuggly, right? Prior 15 minutes is right here. Takes a little downturn. Barely. We were saved. Yay. Oh, we're almost flat again. Oh, stop out. Happens all the time. But look at the amount. 1% stop out, right? Well, you know, if you're going to have a loser, this is the kind of loser to have, and it happens all the time. So, you know, keeping your losers in, you know, to 1% based on quality on your intraday risk factors, nice. Because, you know, if you put on NVIDIA today and you put on Boeing because they're quality, and you put on IIV because of its quality, and then you had your 1% loser in Roku, hey, not a bad day on a double black diamond difficulty day in the marketplace. So I believe that's all I got here, unless we missed something, but I don't think we did.
Just Mike wanting your version of the
Sure.
straight out of Compland.
Yep, let's do that right now. Let me save that guy to the cloud. And where's my chat box? There it is. Okay. Here it comes. Okay, since it's not, I guess I'll have to use the old Control V method. We'll just call this composite modified Steve. And there you have it, ladies and gentlemen. The cloud link is now in the chat area. And by the way, I think I'm going to get them to delete the Bruce Lee icon up here so I can have it exclusively, so nobody else can have the Bruce Lee icon up here. Since all of us educators now know how to actually use the custom channel bar, it's a pretty cool feature. I would urge everybody, if you haven't done so, if you're on the latest version, just come up here.
I need to get the latest version and do that.
What you do is you just click the little wheel up here, and then you go edit channels, and then you can play around with creating your own channels, ladies and gentlemen.
Pretty cool.
Just FYI. All right. So, Steve, unless you have anything to add, I think it's a great time for Scott to walk us out and tell everybody how they can save a little bit of dinero if they've been kicking the tires. Now's a good time to sign up.
Mm-hmm. Yeah, thank you. It sounds good. A couple items on the way out. We have a conference coming up on October 20th that we're also live streaming some really fantastic speakers in addition to Brett Steinbarger, Brian Shannon, and JC Parrots. We've also got some exciting panels lined up too. Find out the details at trade-ideas.com/livestream to be able to watch live. Unfortunately, tickets are sold out to attend in person. If you're interested in attending in person, just send us an email letting us know. We can put you on the wait list to notify you if any tickets become available if someone can't make it. But trade-ideas.com/livestream is the place to go to sign up to get updates about how to watch it. So as soon as we know the link you will be using to stream it on YouTube, we will send that to you along with the exact start time and all that kind of good stuff. There's an ebook we released in February. I hope everyone's already got a copy, but if you don't yet, just go to trade-ideas.com/ebook. Plug in your email address to get the download link sent to you. and grab it. It's got 5 strategies to survive in a post-BTFD market. Both Jamie and Steve contributed chapters, so check that out. We have a podcast. There's a new episode out last Friday. There's new ones coming out weekly. Just search for Trade Ideas Podcast in whatever app you use to listen to podcasts in, and subscribe to it. That way you get the newest episode delivered to your device really easily, no fuss. And then you can go back and listen to some back issues. We've got some guest podcasts that were quite good that are also in that stream, so check those out. The code this month to save from the Office Hours webinar is SAVEINOCT, SAVEINOCT, all caps. And that takes 15% off your first month or year of Trade Ideas. Those of you that are already members and want to upgrade from standard to premium, use the same code in the upgrade path after you log into your account from the homepage, and save that amount, and also get some prorated, if you already, for example, have used 6 months of a 12-month subscription, we can prorate that and use upgrade. So, that's kind of a new deal we got going on now. So take advantage of that. Any questions about any of this at all, email info@trade-ideas.com. That's the email address that goes directly into our help desk software to go to the appropriate team member to help you out. So just shoot your questions there. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at TodayTrader on Twitter. Facebook.com/TradeIdeasPro is the page to like on Facebook, so you can share the stuff we post there with your buddies. Thanks, everyone. The recording will be up later on tonight or tomorrow morning, and you'll get an email reminder tomorrow from GoToWebinar about how to find that playlist. Thanks, Steve and Jamie. Thanks.
Thank you, Scott. And Steve, thank you very much, sir. And thank everybody in attendance for popping in to hear what we have to say. And don't forget to join Steve tomorrow in the Trade of the Week webinar.
See you tomorrow.
All righty. Bye-bye.